The S&P 500 is trading at near record highs. Are we in that final melt-up phase that my guest has been predicting for a while, or is this just the usual? Gold and silver have corrected since the recent rally, but blew way past my guest's target. By the way, my guest is David Hunter. He's a chief macro strategist over at Contrarian Macro Advisors, and I'm really looking forward to catching up with him. He's made some excellent calls, and we'll see where we stand right now. What is the current economic and macro framework that we need to sort of hang on to? What do we need to understand about the market right now? David, it is a great pleasure to have you back on the show. Thank you so much for joining us again.
Yeah, hi, Kai. Thanks for having me on again.
Yeah, really looking forward to the conversation. When I did my homework for this, interview, I realized we last spoke 6-7 months ago. That feels like a lifetime ago, based on all the news that we've seen, and that has hit us here in recent weeks. You're very famous for of course, the melt-up strategy, David. And I need to get your maybe overall glimpse into where we're at right now. Maybe we'll start at the macro high level here. Has your thesis changed at all in recent months?
I guess since we last talked, my targets have been raised and raised pretty substantially in the metals. I think they may have been raised in the equities, maybe not. Depends on around that time, because my fourth quarter letter comes out in early October, and I did raise equity targets then. So there's
I have 8,700 on the S&P for you.
Okay, so yeah, that was just before I raised, because I did raise back in October to 9,500.
Okay.
I think we are in that final parabolic melt-up phase, and I expect we'll probably see those targets reached this summer.
Let's set the framework, though. Let's discuss how are we getting there? What is driving this? I said it yesterday in a conversation. It seems like the economy is doing fine. I'm starting to think that not everything can be manipulated, and maybe the economy is doing better than we've all expected. Besides consumer sentiment, maybe that is geopolitically driven. But I'm really curious what your take is. Is the economy actually way stronger than we're all expecting?
I think it's mixed. I think what we see is that certain parts of the economy are propping it up and doing very well, as we saw today when the capital goods orders came out. It's the industrial side where we're seeing the reshoring, where we're seeing defense spending, where we're seeing a lot of the heavier industries actually expanding. They're doing very well. When you kind of look at the consumer, half the consumers doing very well. Unfortunately, half the consumers are basically just getting by. Cost of living is going up. We obviously got hit with, big rises in prices over the last few years in groceries, and now we have, with the Iranian situation, oil going through going up sharply. So the consumer is, those that have equity portfolios, those that have good jobs and are making, are in the top half of the income spectrum, are doing quite well. Their housing equity is still strong. They're in pretty good shape. But the bottom half of the economic spectrum is really struggling, and so you are seeing, a fall off in some areas. Dining out isn't as strong as it was, things like that. The economy, I think, is probably, we're not in recession. There are aspects of the economy in recession. We may be able to get this thing through to the election. At one point, for those that are trying to get, don't want to see a change in who's kind of running the government, they were worried, at least in my forecast, that we'd see that all come to an end by mid-year this year, and that the second half would be rough and it'd be tough for Republicans to win. Given where the economy is right now, that may be, for those that want a Republican victory, the good news is that it may actually hold together for longer than I expected. So the economy's kind of mixed. It's not roaring away, but there are parts of it that are doing pretty well. Obviously, if the Iranian conflict lasts for very long, that could change a lot. And it's probably a good time to talk about where I'm at because it has changed so much from last time we talked.
Yeah.
You know, my I raised my gold target 5,500, I think, in January, my January letter. And that came out obviously before the big run up in January. I raised my silver to 125. Now, silver went to 122 before it went directly south and got cut in half. Gold went to 55, I think, 5,500, and rolled over and went to 4,100. Um, During that decline, and I basically called that decline. Not didn't expect 50% out of silver, but I was on a podcast that week when silver had spiked, and I said, "This is it's gone parabolic in the short run. You could see a 30, 40%, 30, 35% correction. Well, we got 50 during that correction because it came down so hard. I revised my targets up, which is, as a contrarian, sentiment means a lot to me, and everybody got so bearish with that rollover. I raised my silver target to my current level, which is 180. So I'm looking for 180 on silver, and on my gold target to 6,800. So big revisions from when we talked. I think you
Yeah.
said my silver target was still 75, and my gold target was probably 4,000. Yeah. So,
Yeah.
so,
Exactly.
so I think there is another big leg up, and will be parabolic. Another
Yeah.
steep leg up. We could be there this summer. Doesn't have to happen this. All of it happened this summer. You could spill into the fall, but I do expect another big run. Obviously this week I'm not thinking too many people are singing my praises because the miners are getting hit, the gold and silver are getting hit. There's all the gloom and doom about Iran and oil prices, and there's a lot of talk that silver's going back into the 50s, into low 50s, and gold's going down below 4,000. I don't buy either one of those. I think we are in a bottoming uh, place this week. It's the end of the month.
Mm.
If you look, there were lower levels in March. We rallied, and what's got everybody so bearish is we rolled back over. But I think if you look at it, it's likely the end of the month, kind of squaring of positions, and people going with the momentum. My guess is May and June will be very big reversal months.
What's driving that? Just a sentiment change completely? I'm just curious, maybe summarizing what you mentioned before, just looking for those triggers. Because you said inflation, maybe, or even the Fed interest rate they might cut, but only later this year, when they see inflation coming down to your 2% here. So I'm curious, like, just on timing here, David. Like, maybe to
Yeah,
summarize,
so
what's the trigger? Sorry.
I've said forever that I don't worry so much about whether the Fed's cutting or not because the bond market will determine rates, and I do think rates are coming down this summer, probably even this quarter. You'll see a roll. I think we're very close. It's everything's kind of tied together. The rates are going through a backup here. The metals are going through a backup here. The equity markets have not backed up much, but they're kind of um, trading in a range, waiting, still a little nervous about Iran. So all of it's tied together, I think, and tied to Iran. But if I'm right that Iran gets resolved one way or the other here short term, either we get an agreement or they push harder and have to do some more military stuff before they finally bring them to the table and get what they need. I don't think it's going to last more than weeks, maybe another month at the longest. Um, there's lots of people who disagree with that, but that's where I'm coming from. And therefore, I think rates will roll over, metals will rally, the stock market will rally. It's not so much dependent on the Fed. And of course, we have Kevin Warsh coming in probably. I think he gets confirmed.
Should
And
happen any minute now. So,
yeah, so I would guess he gets through today, but if not, I think he will get through. He's the right man for the job. He's got a lot of experience. What I like about him more than anything else is he's a monetary economist. He's steeped in monetary economics and understands monetary. That's why people get caught up in are you going to are you going to follow whatever Trump demands and cut rates? And you seem just like Senator Warren called him a sock puppet because he got he got picked by Trump, and they assume he's going to do whatever Trump wants. And he's also had a narrative out there recently where he said rates should come down, but people don't understand he's also a hawk in terms of wanting to shrink the balance sheet. And you can have both. You can see rates coming down and the balance sheet being reduced. I think it's going to be a problem because we're moving towards a bust. And I think ultimately it'll get. He may think he's going to cut the balance sheet. My guess is, in response to the. I'm jumping around here, but in response to the global bust, you could see as much as 20 trillion or more come out in increase in the Fed's balance sheet. That means, from that 9 trillion, you could go to 30 trillion. And obviously from 6.5 trillion or 7 trillion, it's even a bigger number. That would not be something Kevin Warsh would tell you he wants to do or he thinks would ever happen. But when you're in the midst of a free-falling financial system, which is what a bust is, what I'm calling for, what I mean by a bust, when you're in the midst of a free-falling financial system around the globe, you can't sit there and say, I want, my long-term goal is to get the balance sheet down, and I'm not changing that. You're going to have to, the only thing that can respond to something happening that fast is money. It can't be fiscal. They'll do fiscal things too, but you will see money coming out of every central bank, if I'm right about a bust, to a tune that we didn't see even in 2008-9, much bigger, to the tune of what we didn't see in, we had 5 trillion come out or expand in the balance sheet in 2020. This one's going to be 4 times that, in my opinion. Again, that's just a guess, seat of the pants guess, but that's what I think is coming. So it really, we all get caught up in who should be Fed chairman, what's his policy, what's Trump think of him, and what have you. Ultimately, macro is going to trump all of that. No pun intended. And the macro is going to dictate policy. And so it really, whether Powell was there or Warsh was there or Bernanke was there or Janet Yellen was there, ultimately it would be the same response. Maybe different timing. One might drag their feet more. Warsh is likely to drag his feet more, which is problematic short term when that happens, because it's going to require a very big and quick response. And I'm not saying he won't print money when it's needed. What will happen is, I think, let's just put a scenario out there where we start, we're in a recession, we start seeing things tipping over. They might say we're going to put $1 trillion in. We need to, but we even Powell has said repeatedly over the last several years that he would not repeat the mistakes of the last cycle, meaning zero interest rate policy, big money printing. He said that. I think Warsh would double down on that. And yet, when you see the system needs liquidity, they will provide it. So they might start slow and say $1 trillion. Imagine $1 trillion slow now. But ultimately, to get to a right-sized policy, which may be 20 trillion, they're not going to get there in one step or 2 steps. It'll be when they finally, deer in the headlights, say, oh my God, this thing's really sinking. Then you'll see a lot of money come out in a hurry. Kind of, we saw it in 2020, 2020, when they realized they shut the whole world economy down and they realized they needed to do something. The bond market was problematic. We were seeing credit problems, and they came in. It didn't take them long then. I think because of what they did in 2008-9 and because of what they did in 2020, this time around, part of my scenario for the bust is they're going to be much more reluctant to do it. And in that time of pausing or trying to figure out what to do or being reluctant is when this thing can really get out of hand, and then they have to do it. So it's, we'll see whether that all plays out, but that's basically been my scenario. It remains my scenario.